So I don't think it's going to have much effect at all. It will consolidate. It will take some banks out, and it does, clean it up somewhat, but it's not going to be what you're hearing on the internet from a lot of other people.
Now, as for the physical market, I know we're continuing to see very strong demand. Typically November and December are pretty slow months for retail demand for physical precious metals, but it has remained pretty strong these months on our side at Miles Franklin. So there continues to be high premiums, right? So, those are actually increasing again now. So your perspective on the physical versus the paper market?
Sure. Well, first of all, the comment is you're not old enough. And the reason I say that is there used to be a pretty good seasonality that you've got a very nice run in the precious metals from December, somewhere in December, sometimes early December, sometimes mid-December, up through January at least. And over the last few years, the last decade or so, you've seen the worst print in silver and gold on probably 5 of those 10 years on the last trading day of the year. It's not happening. It's actually more like it used to back when I was your age, where it starts to rally sometime in December and that carries through to January at least. In fact, I used to trade platinum and palladium almost every January. It was almost a sure thing. Of course, the markets are so crazy these days, it's hard to get a seasonality that works all the time. I mean, the summer is usually bad for the metals, as I said, a couple of times. So, now my take is that the demand is still stronger than the price indicates. That's verified by a couple things. We're seeing this, good price action here at the end of December. We're seeing the premiums remain high for retail. We're seeing the wholesale markets continue to increase their price for 1,000-ounce bars, which is almost a sure indicator that the market's tight and there's not as much free silver out there as the price would indicate. And lastly, what we've seen is in the last week or so, we've seen about not quite 10 million ounces of silver go from the register category, which is the dealer's inventory, to eligible. And that usually indicates fabrication demand. So this could be for, let's say, the mintage of, next year's Silver Eagle, for example. It's not a guarantee. It's conjecture. It's a very well thought out conjecture. So again, going back to Robert Keynes, if, that demand is coming out of fire hose and the flow rate is really significant, another silver squeeze would, potentially start to concern the, let's say, officialdom that we saw again in early part of the year 2021, where, the perspectives were changed and all that. This may sound like an excuse, and you say, well, David, I don't even think you should say what you're going to say, but, the whole thing just doesn't seem to make sense. I mean, when you look at, what the paper markets have done with the money supply and all that, which I've already mentioned, every fundamental fact for, gold and silver to do better is out there, but yet they're not. And so that begs the question, why not? And, I've given my best ideas of why not, but until the money powers really start to fail as far as how much supply they can put in the market to quell the demand. And that's one thing I've talked about in the past, and I think bears repeating, is that until all that physical demand is balanced, again, going back to how much is really in these storage facilities versus how much has been paid for, until you are really able to rectify that situation. And I know I'm making a conjecture here, but I also have some proof of it. And then, we can see these games go on. I mean, basically, the whole system is based on a fractional reserve system, and the silver and gold markets are derivative markets. So because you have a derivative that sets the price, and you have a fractional reserve system in the physical reality, it's really hard to get a handle on how much has really been bought and how much has really been stored. And that may never be known unless you really took an accounting that's valid accounting throughout the entire sector. And the way the system is set up, I don't think you ever see that. That might be a question for Robert the next time you interview him, is how much of this, accounting and auditing is really valid. I know he's done some podcast with, I forget the gentleman's name, I hate to forget it, but the gentleman in the UK. And a lot of these audits are far from a true audit. They're just basically a paper chase saying, yeah, they got the gold. Yeah, we're paid to tell that. We're paid to say they've got the gold.
All right. And to wrap up, David, I guess if you can reiterate your outlook for 2022, what I'm hearing is you're looking for a first kind of slow start to the year, possibly a fall in precious metals, and then going to the end of the year, a rally. What kind of price action should we expect?
I think you outlined it perfectly. I mean, I don't think we're going to see a big washout in gold or silver. Silver, I'm hoping the 2150 level we've already seen it bounced off pretty strongly and pretty good buying down there will hold, but it might, pierce that, and we could even see, something in the 19 level, which is super strong support. If it got to that level, I doubt it'd stay there very long. It'd be a heck of a buying opportunity. I'd put out an alert for the Morgan Report, premium service. And gold, 1700 probably is about as bad as it'll get. I'd just be cautious. I'd say if you don't have any now, buy it. And I would think anyone new in the sector or wants to, go along with the idea, just, dollar cost average or buy in over the next, I would say 6 months. I don't think this tightening scare that the Fed has announced will actually hold water for very long. I'd be surprised if it went any further than 6 months.
All right. Well, David, we really appreciate your time today on this New Year's Eve. And I guess before we let you go, where can our viewers find you if they're interested in learning more?
Yeah, the main website's themorganreport.com. Get on our free service and make sure that, there's more than the landing page. I just announced there's a lot of tabs and a lot of information for free. You can go to the blog and see all the work that I do for free for the public domain. You can also go to the About Us and watch the movie, The Four Horsemen, which is a good overview of the system at large on a global basis. And it kind of puts things into perspective because we go through this cycle again and again. Then there's the book, The Silver Manifesto and Second Chance, certainly, in my view, worth the money. So there's a lot of information that's available at the website for free. You can also subscribe to my Twitter feed or our YouTube channel, and that way you'll get alerted when something pops up that might demand your attention. So thank you, as always, Elisha. It's always fun to be with you. Wish I had better news for everyone, but I think I try to maintain an objective and realistic view on the markets, and take heed to what I've said about how much is really there and how much is purportedly there. They don't match.
All right, David, once again, thank you so much for your time, and God bless.
God bless you.